Now, back by popular demand, it's the Lance Roberts Show.
And good morning and welcome to the show this morning. It is the Hump Day edition of the Lance Roberts Show right here at realinvestmentadvice.com. Be sure to get by our new improved website, realinvestmentadvice.com. Get all of our latest updates, podcasts, blogs, newsletters. It's all there for you. Lots of stuff going on. This weekend, if you go to the website, realinvestmentadvice.com, and click the newsletter link, I wrote an article saying, Selloff Overdone, looking for a sellable rally. And the reason this is important is because, well, that's actually what we kind of started to see yesterday. And again, this has been part of something that we've now been talking about for the last 4 weeks. About 4 weeks ago, we talked about the fact the market had gotten very extended, that we needed to take some profits. And then as we continued to kind of progress through that analysis over the next couple of weeks, we kept talking about taking profits, the things that are looking a little bit risky here, the impact of the potential trade war. Of course, following that, we'd also had an extremely overbought condition in the market as well at the time, and which was really leading to this whole issue of trade that started out last Friday, because when Donald Trump came out and announced the trade war and saying that we're going to increase tariffs on China and then on Mexico as well, that really set up this decline that began really about 3 weeks ago and had actually gotten down to violating some pretty important levels of support. So this all set up the reality that we talked about on Friday, saying, hey, there's a real opportunity here for a rally in the markets, and that's exactly what we saw happen yesterday. And again, the Federal Reserve came out yesterday, Jerome Powell, talking about maybe potentially needing to cut rates by the end of the year. We're going to talk about that this morning a bit, because that may not be exactly good news. Even though the bulls took it as positive yesterday, it may not actually be as good of news as you think it is. But the important thing here is that as we look at the markets, again, we had this very nice little bottom that was built very short term. We broke support last week. We're able to get back above it yesterday. So this is kind of a key point here. This sets the market up for a bit of a rally back to about the 50-day moving average. There's not a lot of upside here potentially. But again, what we've got going on here is a situation of a kind of a declining trend in the markets. And again, something that we've talked about over the last several weeks is that as we move into summer, particularly into August and September, there is a real risk here to the markets, to the downside, continuing to develop at this point. So again, it's a bit early to become aggressive on the markets. And again, we've talked about over the last couple of weeks about becoming more defensive in terms of allocation, shifting assets from offense to defense, utilities, real estate, staples. Those have continued to perform very well. As a good example, on last Friday when the markets were down well over 1%, our portfolios were actually up about 0.29 because of that defensive rotation. So again, kind of watching for how we allocate money and measure risk in the markets is something that's going to continue to be an issue here, because the changes to the economic backdrop haven't changed. Right? We still have the tariffs on China. That China trade war is not going away anytime soon. The impacts to economic growth haven't changed. The additional tariffs on Mexico, whether they get implemented or not at this point, is another concern, because that's another impact to the third largest trading partner that we have in the United States. So when we take a look at who we trade the most with, Mexico right there at the top of the list, we get a lot of products coming out of Mexico, along with the majority of our supply of avocados. So if you're an avocado toast fan, that's going to get really expensive here sooner rather than later. But these are the things that we have continued to kind of watch for and talk about. And again, there's nothing to panic about here. The markets are still holding support on the 200-day moving average. But, importantly, this is something that to keep in mind. While the markets had this very nice rally from December the 24th lows, and I find this very interesting, actually, because the Fed did come out yesterday and they're talking about, kind of the risk to the markets and the things that we need. And, they're concerned about trade. And so we may need to think about unconventional monetary policy as not being so unconventional anymore. It just may be part of the reality is. It's interesting because over the last 18 months now, the market's gone absolutely nowhere. We're back to where we were 18 months ago. But yet there really hasn't been any real major damage. Yes, there was this decline that we had last year, but for the year of 2018, the market was only down 4.4%. That was the first decline in a decade in the stock market, and yet we've now got the Fed panicking, talking about, well, we need to maybe cut rates, offset the next recession. We got to kind of get in there. And what are you worried about? We've had 10 years of a bull market. We've got, portfolio asset balances up over 300% during that time frame. The economy's supposedly booming, right? We have record low unemployment. We've got record low jobless claims. We've got wages that are doing okay. So, if you listen to the media headlines, particularly on a lot of the talk stations, it's all about this booming economy, right? This is the Trump economy. Everything's great. So if everything's so great, why are you already talking about emergency measures? Why are we talking about lowering interest rates? Why are we talking about potentially doing QE? And more importantly, why are we talking about negative interest rates? See, this was a change to the commentary yesterday with Jerome Powell. And look, you're going to hear a lot of talk this week. We've got 13 Fed speakers coming out this week from the Federal Reserve talking about all this stuff. They're messaging about what their actions are going to be on the 18th of this month. So there's a real possibility here. We may see a rate cut as early as this month. So, again, I think you have to really start kind of asking yourself the question. This is something we're going to talk about some more on the show today, is what is it the Fed's actually worried about? And why is it that emergency measures, which have what been fueling the economy and the markets over the last decade, why are those now standard policy? Come back, talk more about that right here on the Lance Roberts Show. You're listening to the Lance Roberts Show podcast as well, all on our website, realinvestmentadvice.com. Get by there, our newsletter, our blog, and make sure you get registered for upcoming seminars and classes. We've got lots of stuff going on to help you with Social Security, Medicare, retirement planning, financial planning, investment strategies. Lots of stuff there for you. It's all on our website. It's all free, realinvestmentadvice.com. Be right back.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.